Bitcoin, bottoming process in progress. A historical analysis of previous bear market bottoms and how this compares. Welcome to the Airdrop Express newsletter. A place for people who want to better navigate the crypto markets with the help of cutting-edge crypto research and unbiased market analysis. Bitcoin RSI returned to previous bottom levels. Let's preface today's edition of the newsletter with the monthly Bitcoin RSI, which has recently performed a monthly close back inside the green area. The green area showcases previous RSI bear market bottoms around the about 44 RSI level. And though the RSI broke down to all-time low RSI levels in this bear cycle, the RSI has broken right back into the green region, and by the same token, the larger macro blue wedging structure that encompasses the entire RSI metric. Technically, this RSI movement looks like a fake breakdown, a downside deviation, before now setting itself up for a retest of the bottom blue trend line as support. At this stage, the question is this: will the RSI form a lower low or a higher low? Because if BTC were to drop to new lows but the RSI forms a higher low, that would constitute a bull divergence and would imply hidden strength even if price is temporarily declining. So this next bottom for the RSI is quite crucial in showcasing the relative strength in Bitcoin's price action. But the fact that the RSI has returned to the green area, an area that denotes 2015 and 2018 bear market bottoms, as well as breaking back into a long-standing pattern, is a good sign for BTC over the long run. In any case, the fact that the RSI is at these levels is highlighting the extremely oversold nature of BTC in this part of the cycle, and that the RSI is ready to start building the initial signs of strength for Bitcoin's long-term recovery. The 20-month MA. According to the 20-month MA, which has historically seen -46% to -63% drops below said MA, BTC could very well have bottomed already. After all, BTC has performed a -57% retracement below the 20-month MA in this cycle. So technically, in terms of retracement depth, one could make a strong case for the bottom being in already. However, in terms of time relative to bull tops to bear bottoms, it may be a little bit early for a bottom. BTC historically has retraced from bull top to bear bottom over the course of 365-396 days. If it takes BTC to drop at least 365 days from bull top to bear bottom, then the bottom would take place by November 2022. Is BTC ahead of schedule? Time-wise, well, previous BTC bottoms have taken time to form. Months even, and it looks like this bottom will take time as well. While it's difficult to pinpoint the absolute bottom, at least we know that BTC is most likely in its bottoming out process. Time spent under the 20-month MA and halvings. Another way of looking at things is that BTC has taken 30-92 days to bottom following a breakdown from the 20-month MA. In 2014, it took about 90 days. In 2018, it took 30 days. If this was the bottom for BTC, then it will have taken some 60 days or so. A bit like in 2018, where we saw 2 monthly candles following the breakdown from the 20-month MA. But even then, historically, it has taken 517-547 days prior to the halving for BTC to bottom. At best, if BTC were to bottom 547 days prior to its April 2024 halving, then that bottom would once again point to November 2022. So the main takeaway here is that time-wise, there is flexibility for Bitcoin to still find a bottom, even if the historical retracement depth below the 20-month MA is satisfied. When it comes to bottom formation, the time to bottom sub 20-month MA is approximately satisfied too. The 3 macro triangles. Breaking down from a macro triangle is what needs to happen for BTC to find a bottom. Upon breaking down, BTC experiences trend acceleration in an effort to find a bottom, and then it experiences multi-month consolidation as part of its bottoming process. Is BTC still in downtrend acceleration, or is it now in multi-month consolidation? Historical breakdowns from the macro triangles suggest that price should have retraced a little bit more to sub 17 Kelvin to formulate its final bottoming out range. Instead, price appears to have rebounded just above that green range, which has been built by appropriating -50% and -65% historical retracements. Therefore, according to this perspective, BTC may be in relief as it didn't enter that green range. That said, I use this perspective to generalize key phases in the market cycle rather than pinpoint the absolute bottom. And one of those phases is breaking out beyond the downtrending diagonal resistance, which is what needs to happen for BTC to confirm its new macro uptrend. Historically, price has broken that key downtrend 366-396 days prior to the halving event, and so At least historically speaking, at the very earliest, BTC could break that macro downtrend in March 2023. Still quite a lot of time before the trend ultimately shifts. In the meantime, I expect BTC to zig and zag in whichever direction is part of its macro bottoming out process. Because whether BTC is in the downtrend acceleration or multi-month consolidation phase isn't as important as realizing that BTC is close to a generational bottom, and pinpointing the particular phases of the market cycle won't change that or dollar cost averaging strategy. Thank you for watching this video. I will be back with new update on my next video.